evening all. Ira Epstein of Linn and Associates with your metal market wrap-up for this Thursday, and we are November 19, 2020, 6:45 p.m. Central Time. There's not much in the way of U.S. economic news tomorrow. There was tonight as the Treasury Department has pulled back the money it had given to the Fed, making money available for Main Street, which never took off in my opinion, that facility that they created. They always kept saying it would happen. It never did happen. And money for the municipalities and for general credit. So that money is going to be called back to the Fed balance sheets on December 31st. The Fed did not want this to happen. We've heard that the Fed wants all its tools out there. It'll decide when to put them back in the toolbox, but they don't control the government. The government can do what it wants. Mr. Mnuchin gave his rules. The marketplace doesn't like it. This market rallied strong in the past hour of trading today, the last hour, and now it's just given that all back on this news. We'll see what it all means. As you look at the dollar, a little bit lower, but we'll see if it gets a bid off this news. As the markets get nervous, you're already seeing a bid in the bonds and the notes right off of that. So as I look at the weekly chart of gold, it's down $25 for the week. The market has gone from a nice looking chart last week, and we'll just cut back for you here, a pullback that now if you took out this low, things get ugly. And that's what you've done. Now it hasn't closed under it yet. And on a weekly chart, you count where it closes, not intra-week, what it is doing. But the bias is certainly down. It hasn't been enough to give gold a breakthrough this 1850 area, but you're so close to it, there's probably some algorithms that want to say, hey, maybe we should try what's under there and see if there's a bunch of stops there. It makes sense to me. When I look at the swing lines, they're bearish. You now have a pattern of lower highs, lower lows. That's a bear pattern. The market is under the 18-day average of closes. That means the bias is down. So I have the swing line, which is the trend down. The filter that filters that one says, yes, it's good. No, it's not, is saying, yes, it is. Bollinger Band's far enough away to reach to see what happens at 1830, 340, but you are very oversold. So that's the element that's missing. And each time we've gotten oversold, this market has recovered. It has not been able recently to develop an embedded reading, including this time frame, didn't do it, to the downside. So is the market going to look at that and say, maybe that we're breaking down, taking the longs out, but you're not going to have legs to the downside? I don't know. All of a sudden, silver's re-challenging that 18-day moving average of closes, so it is losing to the gold market. As bad as gold is, silver's done worse, and silver stays bound right here in the sideways action that I gave something of a dissertation on to you yesterday. You're caught in a broad what I'd call sideways action. It's not a pipe. If it were narrower like here, it'd be a pipe, but it widened up just enough that I don't call it that. The momentum of the chart, as you can see, is not oversold, both numbers. In fact, neither of the numbers are under 30, so that's not oversold. The trend is down, the bias is down. Now, what was support becomes resistance. So the 18-day average of closes is under the 100, and you're under both, so that area is your resistance number. In other words, the good work this market had done was for naught, and the market is now caught in a downtrend. We'll see if it follows through. Here's my guess: it will not. Not because I say that, but you didn't follow through to the upside. I have very serious reservations that you're going to follow through to the downside. The copper market's very overbought. Paying attention to that, it's developed lower highs, lower lows. Now, as I told you, I thought the pros came out against the upper Bollinger Band, and now they seem to be in control, waiting to see the next move. I think you're too overbought in the market to attract new buying. I could be wrong, but that generally doesn't attract it at this level. In the platinum market, you went up to the upper Bollinger Band, closed over it yesterday, and stayed today to the right-hand side. There's still very bullish action, and this market is trying to embed. You can't count today's action because we don't know where the settlement's going to come in. But yesterday, which is Thursday, both numbers were over 80, not the day before. So if the market stays the way that it is right now, this strong, come Sunday and Monday night into Monday trade session, that'll determine if we embed. This chart's now on my parade of the strongest of the metal markets, and we have no trend at work at all in the palladium market. Every day it hits the 18-day average. I wouldn't be surprised that it rallies back up to it today. It's just not doing anything. As for the dollar index, the market is in deep oversold territory. We'll see what it does at day's end here. The market was stronger today, as you can see. It got up intraday to 92.72, lost that ground, but as I just pointed out to you, with the Fed action, it might get a bid at this point. We'll wait and see what that comes in to be. I want to remind you about our futures trading kit, which is a guide to the futures trading. And I think what you'll find is we cover, first of all, something of the history, but then you start getting into trading rules, chart patterns, money management, technical analysis, introductions, all the different exchange brochures. We actually hook up right to the exchanges, so you're always getting the newest ones they have. This gives you an idea as to what they look like. This is fascinating because we hand drew a lot of these for you so that you can see the 14 typical chart patterns and how they try to resolve themselves. You then get into booklets that are there, as you know, the volumes 1 and 2 of the technical trading. The exchanges will have ideas on how you work with different things. I think that you'll find that this is a pretty complete package. Cause and effect is something that you don't hear too much about. It has to do with the M1, M2, and M3 money supply. Then you're going to get our pivot points, our Arun indicators, and of course, our charting software, if you haven't tried it, so you can give it a first-hand drive and see the importance of it, because it's not only just charting software, it's news, vocal news, written news. It's a combination of options, strategies, different parts all built into it. How do you get this kit? And it is free. We want to introduce our products to you. Just simply either give us a call, go to our website, and on the right-hand side, you'll see all the free offers that we have. Sign up for it there. I'm Ira Epstein. You're going to get your invite from me tomorrow for the webinar. Do me a favor at that point. First come, first serve. My subscribers have had their reservations. They've taken their seats, so now the seats that are open are available to you. And I want to ask you a favor. For those of you that like these videos, would you just click I like them? Helps us on a rating.